All right, let's try this again. We are live. This is Travis from Carter Cow, Carter Cow Capital, Carter Cow Trading, and Expert Advisor Reviews on YouTube. Hopefully, everybody's doing very well. I have 9:10 a.m. This is February 13th. Hopefully, everybody's doing very well. As we end up going through trading day, I want to make sure we get through the disclaimer first, and then after that, we'll start with everything else. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision for yourself. Understand that trading involves risk. It involves risk of being able to make money. Also involves the risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. Um, so with that being said, I'm going to end up writing, hey, welcome to the chat. For the people that are watching live, thanks for being able to pop in. I do appreciate each and every one of y'all being able to do that. As we end up going through and taking a look at tradable opportunities and everything else like that, we will take a look and see if we can be able to find some. If we don't, then like always, we'll just stay away and just kind of go from there. But showing myself onto the screen right now, or better yet, I'm probably not going to be able to because I have it recording on another device. But as we end up going through and taking a look at this, we will take a look at trades for its indexes. We end up taking a look at what's happening with the United States dollar. CPI news just came out a little bit earlier today, which ended up causing a huge spike in the market. We will talk about that as well and being able to go from there. Matter of fact, let's go ahead and start off with that. You take a look at the CPI data right now. We end up seeing that um, we end up seeing that consumer price index actually ended up being good for the United States dollar overall on all fronts, which meant that the United States dollar ended up gaining a lot of strength, and we end up having a spike in movement to the downside. A little bit later on today, we're not going to end up having any more news. So the United States dollar, United States dollar strength is the main stronghold that we have to be able to pay attention to. Just got to see how well everything ends up moving from there. I'm going to go through the United States dollar index real quick just to be able to take a look at it, and then after that, we'll flow through and take a look at everything else. So, United States dollar index, we ended up taking a look at this yesterday. We ended up taking a look at it from a weekly perspective. We knew that this market was bullish. We know that the extension that's expected to be at 13,827 when it comes down to that movement. Currently, right now, we can see that the market ended up breaking out of this 12,990 area, which was a strong resistance that had to be broken before you could start seeing that this market would get into the B, which was end up being the B is at 13,161. Once we end up getting into that, we got zone three trading. Remember, zone three trading means that you're going to end up having a huge upside advantage when it comes down to trading. You should only look at being able to trade to the upside as we end up going through. Now, taking a look at this from a daily perspective, we can see that obviously we end up having this triangle that we end up talking about yesterday. We end up saying that we wanted to be patient, catch the market right here at support. If you can catch it at support, then you end up having a strong position to be able to get into. We can clearly see that the market ended up breaking out of this position earlier this morning with strong news. Fell down to support. Actually ended up falling all the way down to 12,990 before being able to have its pop up. So if you were patient enough to allow the market to be able to fall and be able to give you that opportunity to be able to get in, currently right now you have your breakout of this wedge. Typically, what will end up happening is that if you did not get into the market and you do not necessarily want to chase the market, in which I would not suggest chasing the market, anytime that you end up having a breakout, typically you end up having a retest. So I do expect that a retest will end up happening. I don't expect that it's going to end up happening like right now, but there will be a retest that will end up happening. Then after that, you can look for a counter trend line break to be able to get back into. But for my folks that end up getting into it or end up making a trade yesterday, when the market ended up falling down to the support, or earlier this morning when the market fell down to support, congratulations for your patience. You end up getting paid off very well off of that one. I would protect myself a little bit more when it comes down to that trade. But overall, United States dollar is bullish, which means that when we look at the index pairs, we should see that we should see bearish movement overall when it comes down to those pairs. Let's take a look at what's happening with. Let's see what's happening with oil. Oil is still in consolidation. Really hasn't made that much of a move overall. Currently, right now, the support is at 82.50. The support is at 63.62. That's long-term supports. From a weekly perspective, the market is showing signs of being able to have a counter trend line break and starting to pop up to the upside, which is good. But it's still in consolidation. So I'm going to say that it's short-term bullish, but it's kind of speculative at this particular point. We do have a counter trend line break as we speak and kind of looking at it, but also we do have consolidation inside of this area as well, inside of consolidation. So it makes it kind of hard to be able to decide that we're going to end up getting into this trade until we end up breaking out of this overall area. And what overall area am I talking about? Here's your resistance. Here's your natural support. The market will have to break out of this area first before I even consider being able to get into a trade off of this one. For the people that are watching live, type in a while. Yes, this makes sense for us being able to not get in off of oil yet. We're still in consolidation, which means that we have a very low probability of being able to win on this trade if we truly wanted to. I would wait for the market to be able to break out of this area first at 79.50 before being able to jump in. Okay, let's take a look at gold. As we end up taking a look at gold, we end up talking about the same thing when it came down to this movement. We end up seeing consolidation. We talked about a wedge that we end up seeing from this overall movement. From a weekly perspective, this market has been inside of this wedge for a few weeks. We take a look at it from a daily perspective. This market was inside of a consolidated box area, and since then has broken out this morning. Because we end up having to break out to the downside, quite frankly, there's no trade for us to be able to take to the upside, in which that was our idea in the beginning of last week. Remember last week we ended up hitting take profit one at 2060, but we was trying to see if we can be able to catch it all the way up to 2088. With the United States dollar end up having strong news overall with CPI data, we can see that overall end up moving this market to the downside. So currently right now, if you're looking at being able to make a move off of this, the move will end up being to the downside. So let's take a look at hypothetically, if you wanted to be able to trade this to the downside, what that would actually look like. Remember, on Smart Trader, you end up having Smart Fibs. Smart Fibs allows you to be able to take a look at your Fibonacci's by just being able to click on a button. It makes it a little bit easier. The market failed. The market ended up retracing to the 618. The 618 is this red line that we end up taking a look at. I'm going to make an ABCD so you can be able to take a look and see what that looks like. You just give me one quick second if I can be able to find it. Okay. Here goes your A. The market fell down to B. Went all the way up here on the first resistance up to C, which was the 618. Remember, red goes to red in this case. The market fell down. It will go down to 1926 as your D extension. So currently right now, we're taking a look at movement, this overall, how far we end up having for its overall movement to be able to complete this move. You end up being 795 pips off of this movement. If you're looking at being able to place a stop loss will end up being above the overall swing high. I'll probably end up placing at 2060, which is about 586 points. I don't like this move as of yet. The reason why I don't like this move is because, once again, I'm not interested in being able to chase on this move. We see that the market ends up breaking out to the downside. Typically, when you end up having a breakout, you end up seeing a retest. The retest that we're looking for off of this movement will have to be able to push back up. The retest will have to be able to push back up to support, turning past support in the future resistance. Then after that, rejecting and then pushing down to the downside. If we get that, then I'd be interested in being able to take the trade on gold. But for right now, I'm just sitting on my hands. I'll just wait. The idea for the buy trade, I'm going to go ahead and get rid of that. We already done made money off of this trade, so I'm going to get rid of that one as well. And now we're just paying attention to downside movement. Okay, so we went through the big three of being able to take a look at that at this particular point in time. For the people that are online live right now, if you have a currency pair that you would like to be able to talk about, let's go ahead and talk about that right now. Also, while we're end up doing this, if you watched our live stream yesterday, we ended up talking about how we felt like United States dollar, NAS 100 and US 30 were going to end up falling to the downside. Currently, right now, we do have that counter trend line break that ended up happening off of this movement as well. Now, let me explain why I felt like the market was going to end up moving to the downside off of this one. And then after that, we'll kind of go from there. You take a look at what's happening with NAS 100. Currently, right now, it's going through its ABCD swing. The market only retraced down to the 23.6. The 23.6 is a very weak retracement. And what I mean by weak retracement, that means that there's an 80% chance, and sorry for making my 8 very weird, there's an 80% chance that it will end up finding some type of resistance right around the 127, or in my case, negative 382. The reason why that ends up happening is because of the retracement in general. Typically, when you end up seeing that, the market has just been strong, and at this particular point now, you're starting to see that people that end up buying or taking profit at this particular point, expecting that the market is going to end up having a retracement. Now, we end up getting a counter trend line break off of this one. of the candlestick formation, and we end up seeing that the market is somewhat in the no trade zone. But knowing where the market was and knowing that it ended up reaching all-time highs, the expectation was that the market was going to end up falling. And where do we expect that the market's going to fall down to? You just take a look at past. You end up taking a look at past resistance, turn future support. I do believe that the market will fall back down to the B, at least at 16,970 towards its overall movement. The question is, can we get into it at a suitable enough number with a good enough risk reward factor that allow us to be able to get in safely? We'll take a look at this. This movement started to be able to happen right around 1400 hours yesterday when the market ended up breaking. So if you end up catching it right there, then that was awesome. If you have not caught it at that particular point, what I do expect is that we probably might end up getting a little bit more downside movement, but we'll probably end up retracing somewhere around 763, somewhere around that area. I will start being able to place in a counter trend line break and then look at being able to fall back down to the support that ended up happening. The reason why I'm saying that number is because if you notice, it ended up being a resistance at least 3 times when it came down to overall movement over the course of the last month. When it came down to this movement overall, I do expect that the market's going to fall. The question is that are we going to get a retracement enough that we can be able to get into this pair and feel very comfortable with that overall move? So that's where we're at when it comes down to this one. Just waiting on a retracement. If we end up getting that retracement, then after that we're good when it comes down to being able to trade this pair. US 30. Take a look at US 30. We end up talking about being able to sell on this pair as well. This market has made a significant move already. Market ended up retracing all the way up to, let's see, get rid of that stuff. So we talked about this in 2 different ways. We're going to talk about what ended up happening with the buyers and how they end up profiting off of it yesterday, and then after that, we'll talk about what's happening with people that are looking at being able to sell it because it's a reversion. We could possibly be able to make some money off of it. Okay, so going back to ABCD swings, you take a look at this from a weekly perspective. The market ended up swinging or end up retracing all the way down to 31,790 or 31,800, and the D extension off of this one was at 38,950, I believe. Market ended up completing that overall position yesterday. Market ended up completing that position yesterday. With that being said, the expectation was I wasn't going to look at buying at that particular point anymore. We can see from the stochastic we're definitely in the sell zone, which means that we got 7 to 11 candles of overall bearish movement. If we're taking a look at that from a US 30 perspective, we're talking about 2 to 3 months of overall movement to the downside that we should start to expect. But with that being said, we're not necessarily looking at being able to get into this as a swing trade. We're just trying to get what we can with the expectation that the market will fall down to supports, and we can be able to take short-term profits off of that one. The first support that we're looking at is at 38,300. Currently, right now, it's about 160 points away from this overall movement. We can see that the market ended up breaking up to the upside, completed the extension, and currently right now, there goes your counter trend line break as we speak right there. Remember, anytime that there's a breakout, then there will end up being a retest. I always say that because typically it always happens. We go to the daily, we go to the 1 hour. We can see that there's a breakout currently right there at this particular point. Now we're just looking for a retest. We have an indecision candlestick right now as a doji currently right now in this 9 o'clock time frame. Just means that the people that end up profiting off of this long-term move right here end up taking profit, and the people that tried to be able to get in are getting fought with people believing that the market is going to go up to the upside. So there's no reason to sit up there and chase this market at this particular point. If this continues to happen like this, then I do expect that we'll probably end up seeing some slight bullish movement at least to be able to push back up to 38,650, and then after that, possibly be able to see this market continue to go and complete its overall move at. We'll take a look at this one. We just take a look at this field. We'll just go back down to support 38,300. We end up being in the area where we'll look at being able to get out at. If we go ABCDs, this one broke the A. And what I mean by broke the A, this was your A right here. When the market end up making its retracement, it retraced above the A. Typically, that doesn't happen, and typically, what that means is that when the market retraces above the A like that, you're going to end up seeing bullish movement. In this case, it did not happen. The market ended up retracing all the way down and then fell from here. So this fib that we're looking at, really and truthfully, is null and void. We don't have to pay attention to it a little bit more. What we do have to do is place in a new fib that matches up with what's happening with the overall swing. That swing will end up being from this top right here as your A. Your B is where you have 2 candlesticks to the left and 2 candlesticks to the right when it comes down to your overall low before the market starts to push up, which is right there. Market ended up retracing up to the 382, which is at 38,820, and the D extension off of that move was at 38,633. So currently, right now, this gives me more reason to be able to sit on my hands and kind of wait to see how the market kind of reacts off of this one before being able to jump in. I don't necessarily. I'm not going to say that I love what I'm looking at right here, but there's better charts that are getting cleaner. They're getting cleaner structures and setups that I'll be interested in being able to get into. Currently, right now, I'm not seeing that as a good one to be able to jump into right now at that point. So, US 30, not in it, not going to pay attention to it, not going to end up doing anything with it right now. For the people who are watching live right now, is there a certain pair that you would like to be able to take a look at as we end up going through our main functions or our main trades that we end up paying attention to at this particular point? Okay. As we end up going through with this, I'm going to end up talking about some U.S. based pairs that are starting to show a little bit of a U-turn. One of my systems is a reversion system that looks at being able to scalp based off of smart bands, being able to find the tops and bottoms of the market. Currently, right now, I'm starting to see that we have a little bit of movement off of the Australian United States dollar, and trying to see what's happening based off of this movement. So we'll look at Aussie United States, and we'll take a look at Euro United States before getting out of here. B Cook, what's going on? Hope everything's going well with you. You end up saying Euro United States dollar. Makes a lot of sense in being able to take a look at this. I'm gonna finish off with Euro United States Australia United States, and then I jump right onto that one. Take a look at this from a weekly perspective. Always start off with the weekly, then after that go to daily. Remember, weekly tells you about what the long-term direction is. Daily tells you about what's happening overall from a 7 to 11 day standpoint. If we just go back into the swing, I'm going to start right here at this fractal high. Actually, this would be a good time to be able to go back on the Smart Trader. Make it a little bit easier. Let's see, I'm going to clear the screen. The same movement that we end up. What's up, Casey? Seeing that same movement that we end up taking a look at was right here. So click on Smart Fib and go to the fractal high. There's our current fibs as we take a look at it right here. United States dollar ended up obviously end up having a huge push today based off of news. So we end up having our A, our B market went all the way up to the red area or the 618, which means that the expectation is that the market will eventually fall down to 52 cents when it comes down to market movement. But currently, right now, as it stands, we can see that the market is still short-term bearish, and we know that the long-term swing will end up being down at 52. We take a look at this from a daily perspective. And since we have our C turns into our new A. I'm going to click right here. Currently, right now, the market ended up retracing all the way up to the green level on a daily fib. We have a counter trend line break that ended up happening based off of this. The market is still currently in a R2 position, but the short-term move will end up being at 61.75. 61.75 is the daily D extension where I expect that the market is going to end up eventually falling down to. I'm going to make this a little bit larger and I'm gonna make it as a transparent so everybody can be able to see it. Okay. So from a 2-hour perspective, I'm gonna start off right there, which is our fractal high off of our fractal high based off of our daily. So I'm gonna go into the 2-hour and take a look at this. This will give you, for the people that like looking at scalping opportunities, for the people that like looking at short-term swing trades, this will probably end up being the most ideal position for you to take a look at this from a trading perspective. This market has went through 1, 2, 3, 4, 5. Currently, right now, it's on a 6 swing as we end up taking a look at this. Retraced up to the 5-0. The extension's at 63, 63.71. So 63.71 from here at this particular point is about 98 pips. If I'm looking at anything, I'm going to place my stop loss above the swing high. You can either place it above this or you can place it above the overall swing high in general. It will still be inside of the Fibonacci's, but that's the only way that you're going to end up getting a good risk versus reward after allowing the market to be able to retrace. It has to retrace first before being able to jump into it. So currently right now, there's two things that I'm kind of hesitant on being able to do or being able to pull the trigger on this. The first one is that you look at the B and you look at what the market is currently right now. That was the support. That was the previous support, and that's the previous B. So the market will have to, if the market's going to go back into consolidation, it's probably going to end up popping up right now, which means that gives us our retracement. But that means that I wouldn't look at being able to take an entry off of this trade until the market ends up closing below 64.60. If the market closes below 64.60, then after that, you got a pretty good trade to be able to take a look at. If it doesn't close below 64.60 and it gives us some upside movement, then after that, we just have to be a little bit more patient on that movement overall to the downside. But this is our stop losses. I take profit right here. This is more of a setup. I'm just going to wait and see how everything kind of plays itself out. My stop loss will end up being above this overall consolidation at 64.60. Take profit will end up being at 63.71 once that ends up happening. Just waiting for a proper entry. But that's what I like when it comes down to Australian United States dollar from a swing trading perspective. Now, from a short-term move perspective and seeing this market kind of turn around and U-turn, I will look at scalping opportunities. If you can be able to catch something on a 15-minute timer, kind of like what's happening right now, where you end up seeing that you have a morning star that's starting to happen. If you're one of those people that like to be able to get 10 to 15 points based off of scalping opportunities, if this closes the way that it is, I'll place my stop loss just below the swing low off of this movement at 64.57, and then after that, look to be able to push back up at least 10 to 15 points if you can be able to get that. But right now, it's retesting this overall candlestick movement. As long as it ends up breaking above 64.75, then I think you have a solid position to be able to get into. But I would be patient off of this one as well. Okay, that's Australian dollar, United States dollar. We're going to end off on Euro United States dollar as 930 has hit. We'll take a look at the indexes as well before we get out of here, and then after that, kind of go from there. Let's take a look at EU. We take a look at EU. EU, all it did was just reject off of the resistance at 107.75. Currently, right now, it's basically back inside of the middle of consolidation with the expectation that the market will fall down to 105.50 before being able to make a movement. Currently, right now, this is not the cleanest of charts to be able to get into from a weekly perspective nor a daily perspective, because we can clearly see that we're in a long-term consolidation hold, which means that you're looking at being able to jump into this pair. You should have counted that resistance at 101.75. If you did not, then quite frankly, you trading in a no man's land is only going to give you a 33% chance of being able to win. So EU has completed a daily de-extension inside of that consolidation. It literally just hit a 107.20. There's a counter trend line break for this movement as well. But currently, right now, for us being able to jump in off of this pair, I would not be interested in being able to do any selling at this particular point because the market has completed the de-extension off the daily. I wouldn't look at being able to do any buying because there's no U-turn off of this move as of yet. And once again, there's more cleaner charts, or there were better opportunities to jump into the market a little bit earlier, based off of movements that we end up seeing off the United States dollar index and what ended up happening based off of US 30 and NAS 100. So I'm gonna end up waiting on these. I don't like what I end up seeing with those because it is 9:30. That means that we can take a look at US 30 one more time, see what's happening with the overall move at this particular point. Taking a look at it from a 15-minute perspective. Currently, right now, what we're looking at is the U-turn that we end up talking about. I do see that we had a morning star candlestick formation. The market is retesting this morning star candlestick formation. It's starting to push back up. This will be a great area for people that are looking at being able to scalp. You're looking at being able to scalp. This would be about a 10 to 15 point move where you can be able to get it. Placing your stop loss below the swing low at 38, 380. You're talking about risking 100 to be able to make whatever number that you're looking at being able to get in. B Cook, you're good. Thank you for being able to jump in. I do like the swing. I do like the U-turn at this particular point. I do like placing my stop loss right here. The question is, where would I want to be able to get out? If we go based off of previous history and look at supports, we got two different areas that we could be able to take a look at. One will be right here, 38,540. The next one will end up being the support before the wedge actually ended up starting, which was right here, 38,550. And then after that, you could talk about being able to get all the way up to 38,650 if you're interested in being able to do that. Me personally, I'm not. If I'm going to scalp, I'm going to scalp. I'm not going to look at trying to swing trade off of a U-turn. So my personal position that I would look at being able to get, as long as this gives me a counter trend line break off the 15-minute or a movement from there, I would probably go from here, place my stop loss just below this point right here. The risk reward factor is not necessarily the greatest, but from a scalping opportunity, you can be able to get your stop loss. You can be able to move your stop loss to break even and kind of ride it out off of this position. But it has to hold on this candlestick. Since this is a 15-minute candlestick, I would wait until this candlestick closes before being able to jump in. I'm trying to see if there's going to end up still being upside movement. If there is, then you got an opportunity. If not, and it breaks below the swing low and it keeps on breaking down, then there's no reason to be into it. Remember, you're going against the direction of highest probability at this point. Because you are going against the direction of high probability, you have to be a little bit more cautious with your positions of being able to get in and being able to manage it when you're trying to get out. Okay, now it's 100. We'll finish off on that one today. Going back to what we ended up saying, we do have the counter trend line break. Or I'm sorry, we do have the breakout. We're just looking for a U-turn. U-turn position off of this will end up being at 17,663. Currently, it's about 40 points away. As long as everything kind of plays the way that it's doing, you can place your stop loss as a scalp trade. Once again, I would like to enter just above this candlestick right here, place my stop loss below the swing low, and have my take profit be right there. If I'm trying to do this, this is a one-to-one once again. Not necessarily the greatest risk reward factors, but these are ideas. So if you're not interested in being able to have risk reward factors of 1-to-1, me personally, I'm not. I like 1 to 2.3. If you like that, then you could be able to take that opportunity. 15 minutes in the buy zone, we're starting to see a little bit of a U-turn, but quite frankly, there's no confirmation that it's ready to go. I would not take a entry until the market ends up getting or closing on this candlestick and kind of going from there. If you like what I end up doing, please make sure that you end up clicking on that boost button as it will help me out for us being able to get viewed on TradingView a little bit more. Also, if you're interested in being able to learn a little bit more what I do from a trading perspective and a review perspective for us, my YouTube page, Expert Advisor Reviews, all you have to do is just be able to click on the links that I end up having on my profile to where you can be able to see those. Like always, make sure that you end up planning your trade your plan. I see each and every one of y'all in the next video. Take it easy.